Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, July 19th, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Downgrade in the market state. You know that's not a good sign. We went from uptrend to short-term pullback. Not so bad on the S&P 500 from a pullback off the top standpoint, and certainly uh, stronger acting indexes for mid and small cap. But with the devastation in leaders and the NASDAQ 100 having multiple closes below the 21-day moving average and joined today by the S&P 500 failing to get back above the 21-day moving average. You can see the trend gauge over here. We've got short-term trend downgraded to neutral. And leaders, when we go through the 21 over 21 list and you see the devastation, 11 of them with clear breaks of the 21-day moving average, we downgraded that to the dreaded red arrow. Relative to the medium-term 50-day and long-term 200-day moving average, still green arrows there, as all five of the indexes, the major indexes, still trending above those levels. Really what it is it's time for, we can recognize when the tailwinds are firmly at our back, and that's when we accentuate our index leveraged longs with leading stocks to take advantage of that good environment. That good environment kind of went away, especially over the last 3 days. And that's all it takes sometimes, is for the market to decide. And it kicked in right when negative seasonality kicked in as well. So 3 hard days of selling, uh, especially in the big cap tech, which dominate the indexes, market state downgrade, joined also by severe breaks in a bunch of the growth leaders. No question about that. And thus the red arrow there. So let's get into it. Third day of selling. Here are the final numbers. 21 over 21, not bad, mainly due to Coinbase having a big bounce today. Up an average of 0.7%. If you remove Coinbase, it's closer to 0.5% to the downside. Still 10 up, 2 neutral, 9 down, 11 coming off, and you'll see the devastation when we get through the charts. The big eight down an average of 1.12%, led to the downside by Tesla, down 4%. Trump, in his acceptance speech last night, said he was going to work to get rid of the mandates for EVs. Guess what? Tesla's an EV company, but that's more. I've read several analyses of that, and it may actually benefit Tesla because they're already an EV company. It's the big manufacturers that also produce uh, gas engines, diesel engines, that are having to put money into EVs because of this mandate. If they pull back, that might leave Tesla as the only one standing. So we'll see how that plays out. But we are at the mercy of the stock price, and Tesla, after holding up very strongly over the last week and a half, gave it up today. We got stopped out on the small position that we took yesterday. The RG8, this is our 8 growth ETF composite, not really a bad day. Down 0.5%. The S&P 500 opened flat, as did the NASDAQ and small caps, but deteriorated. Put the high in within 30 minutes. We always monitor and show in the tail of the tape the 30-minute range. And if we topped early, and that pretty much sets the table for the rest of the day for what the overall bias is. And we saw basically every attempted rally sold. A big series of lower highs and lower lows throughout the day. S&P 500 down 0.7, equal weight in the same ballpark. NASDAQ 100 down 0.9, equal weight about the same. Dow down 0.9, mid caps down 0.7, Russell 2000 small cap down 0.6. Global diversified 60/40 stock and bond down 0.5%. Our flagship portfolio, GROTECTION, down 0.6%, down about 3.2% off the high. Now the S&P down about 2.8% off of its high close. And obviously we've lightened up, as you've been watching over the last couple of days, down to just 2 core stock holdings and a bunch of indexes, and several of them defensive. On the defensive side, we'll talk about that when we get through this video. So, and it is Friday, so we're going to show weekly charts in the upper right-hand corner. You can see the change on the week for whatever it is we're showing, as well as the last 3 months of candles. And really the thing to take away is, although it was a bad week, you can see how strongly we've been rallying off of the lows, and you just pull back at times. The market never goes straight up completely. Here we had a test of the 10-week moving average. Let's see, that was the week of 531, and then we went up 5 out of 6 weeks, and now we're pulling back again. So the pullback, however, certainly hit growth worse than it hit value sectors, and that's been apparent in the damage to the leading stocks. So here's the S&P 500. You can see it did an undercut and closed back above the 21-day yesterday. That's a spot for a low risk long. We took that yesterday and got stopped out on it for a 0.07% hit to the portfolio. Risk reward clearly there if we put it in the bottom at that level, but we didn't. And we're holding 5,500, but closed below the 21. We took that small loss today. We're right now at that big support level. Let's go to a 60-minute chart and remember the 5490-ish level that we were drawing lines for 2 weeks. Failed breakout above. Finally, the breakout stuck at the beginning of July, and we're back testing that level now. So 5490 to 5500, a key level. We bounced at 5500 several times during the day today, and we'll see if that holds next week. And that would get us, a break of that would get us back into this range where 5445 to 5450 is the range where we battled back and forth. And a break of that, there's really not much support down to around the 5350-ish level. So one level at a time, and couple the levels with the action in the other indexes and the individual sectors, and how is growth versus value acting, and that dictates how much exposure we're going to have to the market. That's the S&P 500. Let's go to the NASDAQ 100. Certainly worse. Failure yesterday. We're still in the SQQQ short on that failure into the rolling over 21-day moving average. Lower low today, coming very close to the 50-day / 10-week moving average. And that's a logical spot for a bounce. And it also corresponds with some lows over in the left side of the chart. So that's what we'll be watching next week. Going to the Dow Jones Industrial Average, 2-day harsh pullback, but it was a slingshot 6-day move higher. Closed below the 8-day, still holding above the 40,000 level. S&P 400 mid cap. 3rd-day pullback after the 5-day slingshot, back below the breakout level now, which is around 3050. And we need to really hold this 3,000 level. Obviously, the first candle there was the break above level, and as I said yesterday or Wednesday, you can give back half of this, and the uptrend still be intact. But we're coming very close to that halfway point. Russell 2000, very similar chart, still holding the breakout though, unlike the mid cap. So, and still above the 8-day exponential moving average there. So you can see the strong outperformance over the last week, except for the past couple of days when we had that pullback after we just got stretched a bit to the upside. Let's go to the equal weight indexes now. Here's failed breakout now on the RSP, equal weighted S&P 500, 2 days of a pullback. Still holding, there's this breakout level before the high, this 166.50-ish level. We're still above that, and it's still above the 21-day moving average. So broadening out a bit, but we need to put a line in the sand there, at least with the 21. And we'll look at QQEW, equal weighted NASDAQ 100, which had a breakout before equal weighted S&P 500, but that has failed as well. And we're right on the 50-day moving average there. So those are the major indexes. We'll go to the VIX, and it's been a strong up move for the VIX. That's a bad print there. But above all the major averages and now above the 16 level. The market has done its best work below the 16 level this year. Also seeing obviously the range expansion with that rule of 16 that puts us over a 1% intraday average move projected forward. And that's well off the 0.75% that we were looking at just a few days ago. So definitely some increased volatility there. Let's go to the dollar. Dollar week has bounced the last 2 days back above that 104 level. How did that translate over to the precious metals? Not so good today. Gap down here in gold, failed breakout. Let's go to gold stocks next. GDX failed breakout, although it did close in the upper third of the range. Third day down after a strong move up. And silver, which is the weakest of the three, big gap down there. Top of the range close, but if you extend this line here, you can kind of see how it came back. I don't really trust bounces like that, but it did come back to that downtrend line because theoretically you can still say it's holding the line and keep going lower and lower, but a failed move at an attempted move higher on that for silver. Bitcoin, however, huge day, uh, breaking out above this little consolidation and putting some space between the bottom of this range here. And we'll see if any pullback, we've got 2 weekend days to trade Bitcoin here. No telling where this will be Monday morning when we open back up. And this is the reason why Coinbase had, which we stopped ourselves out on yesterday due to a market call, did we'll see if we can pull back. Any pullback holds that breakout level that Bitcoin achieved today. On to bonds. Bonds have been trading in a tight range. We're at the bottom of that range now. Bond prices down mean bond yields up. Here's TLT at the bottom of the range as well. The TYX, the yields bouncing toward the top of this last 6-7 day trading range. And the TNX, same situation, trading near the top of the range. So that's our inter-asset correlation. Let's go to the tail of the tape. Didn't take long for the stochastics on all the indexes for the the 5 major indexes and the RG8 to roll over. The NASI RSI still is in overbought territory. It's going about sideways now. We'll be keeping an eye on that. You can see the VIX above 16, so the color change from green to neutral, along with fear and greed in neutral category as well. Bull case, we're going to have to change this now with the break below on 719, and we'll see. Just one close below, multiple closes are required for a true trend change. We'll see what comes up next week with the S&P 500. After 3 days down, that's normal time for a bounce, but it's the type of the bounce that we see, and we are in a seasonally weak period. Excuse me, some news on the day. Massive internet application outage across the globe due to a CrowdStrike Microsoft software update that was pushed out, just crippling a bunch of applications worldwide. Day count, third day down, third day below the 8-day exponential moving average on the S&P, first day below the 21. Still kind of a sideways slope, down by a few points we kind of use a 0.1% plus or minus to determine the slope. So basically still a flat slope on the 21, but we need to see some progress on Monday to keep that slope flat or possibly turn it up. Expectations turn to short-term negative now with the S&P and the NASDAQ 100 below their critical 21-day moving averages. All rallies sold today. That was very clear. The only outstanding sectors were banks, utilities, and healthcare. 9 out of 11 of the spider sectors down and led to the downside. We already discussed the precious metals, but tech, XLK, and semiconductors hit very hard again. 2 stops in-house. There were 2 positions that we took yesterday. Tesla with the reversal on the probably the EV news. Had been acting well, not anymore. And SSO, slight loss on that failed break on the recovery of the 21 near the closed yesterday. So reduction in adjusted beta. We're below 1 now, 1 being the equivalent of being fully invested in the S&P 500, dropped from 0.93 to 0.78. These were the things that we were watching coming into today. This is something we're going to feature on the tail of the tape, what we want to watch and review what happened. But the 21-day moving average, obviously the S&P, that broke. NASDAQ 100 versus a 21, which has now flipped to resistance, didn't even get close to that today. And NVIDIA still holding above its 50-day moving average and 10-week moving average. So a little bit of win for the bulls there. But the bottom line, day 3 of selling, S&P joins the NASDAQ 100 below the 21, and it was certainly a brutal week for leaders, and that's what we're going to take a look at now. I'm going to bring up the 21 over 21 list. We're going to sort it by price percent on the day. And first, I got to get the right list up, sorted by price percent on the day. So we'll see. We'll start off with Coinbase, which very clearly had the best day. When things were very weak late yesterday, just as a market call, we went ahead and closed anything except the 2 big names that we have left. But coin with a nice bounce today, nice volume as well. So the market writes itself. This will be on the list, and it kind of, you can say that it trades contrary to the overall market because it's going to do what Bitcoin is doing. And if that is going to be strongly uptrending, then coin will be a safe haven for Bitcoin enthusiasts. But of course, you've got that overnight risk. ARM, nice bounce, but it was on an upgrade today, up 3.2%, one of the few standouts in Semiconductorville. But where did it pause? Right into the now declining 21-day moving average and down 9.8% on the week. So keep an eye on these weekly charts in the upper right-hand corner here. I'm going to focus on the daily, but you'll see a lot of outside negative reversals. Uber, for instance, here down 7.1% on the week. Closed the week below the 50-day, just above the 200-day, and below the 21-day. There's such a thing as being too tight for too long, and that's what we saw here, not making any progress. Several failed breakout attempts. We saw several failed breakout attempts on a lot of stocks that we had in the portfolio, including in the 21 over 21 list, and that was just a shot across the bow, harbinger of things to come, I guess you could say. Bros, nice bounce today after really what looked like a big shakeout yesterday, but closing below the 21, and it's rolling over. And again, a terrible handle on the week. AppLovin, tight action, not complete devastation here, but 3 closes now below the 21. Lilly, terrible week for Lilly. Look at all these blue up weeks and then 5 of them undone in a single week, down 9.6%, sitting on the 10-week/50-day moving average. Weatherford, oil stocks held up better than the average stock this week, up 2.3% on the week. Cameco, uranium stock, after this nice break of this downtrend line, completely gave that up. Terrible candle on the week, down 11.8%. Datadog down 7% on the week, breaking the 21 and 50, sitting on the 200-day moving average. ARK-K, basically flat on the week, so kind of a standout here. And it's something we're paying attention to. 7 of the 8 top holdings are still looking pretty good in ARK-K here. And you can see the relative strength coming into this week. So it is holding up still above the 21 day. So that is, again, a very minor win for the bulls and something we'll be focusing on. Apple continues to be the strongest of the big 8, down 2.7% on the week and an outside negative reversal for the week, but still holding the 21-day moving average. Biotech, mild 3-day pullback after 8 straight up days, only down 1.5% on the week. Palantir, very strong software stock, holding up. It's been up like about 10 weeks in a row now, up 2% on the week, and holding its breakout, which you can't say that about a lot of names. So this is at the top of our list. ITB, home builders, pulling back, strong week, up 5.6%. Look at these 2 candles with the apparent thought that interest rates are going to be cut. And there's a housing shortage as well. And we had some good earnings reported by some home builders this week. SMCI, 4 straight down days after a failed breakout, down 12.4% on the week. GDX, 3 strong selling days, down 2% on the week. Corning still holding up great. This is just a case of good stock, wrong market, and that's why we sold that yesterday, down 3% on the week. But after that big move up, not really giving much back at all. NVIDIA, key level here at this 10-week/50-day moving average. We have half of our position hedged the rest of it on a break below the 50-day. Coherent, strong for quite a while, but an ugly week this week, down 8.1% and breaking the 21-day moving average today. Volume picked up on the selling the last 3 days. Tesla, you can see the ant's hair, meaning up like 12 out of 15 days, I believe, but not today. Should have held that 8-day moving average in the bottom of this little shelf that it built. Volume was lighter today, so that's a plus, down 3.6% on the week. This still looks okay relative to the big up candle, although volume heavier on the past 2 selling weeks than it was on the up week. A lot of influx news with this one. And FTC investigating HIMS today, announced it's investigating them. That broke the 21 yesterday, followed through to the downside today with a break of the 50-day moving average. And this is because they're using compounds instead of FDA-approved GLP-1 injections for their business. So the FTC looking into it. Could be something, could be nothing. It's an overhang, and that makes this an avoid for me, down 10.6% on the week. And that's your 21 over 21 list, and that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Connor and Ted will have the weekend roundup, the Revere roundup for the weekend Sunday, so that you're prepared for what's going on in the market next week. We'll be going through sectors this week, rebuilding our 21 over 21 lists, which really have been decimated. They're probably going to get a bunch of value stocks moving in there. That's not really what we're looking for, but we take the market that is presented to us, not the one that we wished that we had. And a reminder that our flagship portfolio is named GROTECTION because it's designed to grow assets during uptrends. Start pulling back, we start pulling back. You get into a full downtrend like in 2022, we get the heck out of the way. Had a big downtrend last fall as well, and the timing of it started just about similar to where we are a year later, late July. So seasonality now a headwind, close below the 21. We'll see what next week brings us. Will we get more defensive or wait for after the devastation in a bunch of these leaders? They need to form bases and set up again. So expecting slim growth pickings when we go through our deep dive this weekend. And that's going to wrap it for the week ending Friday, July 19th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great weekend.